Hello and welcome to India Business Hour. I am Ashmit Kumar and here are the headlines that we're tracking this evening. Reliance Industries is transforming into a deep tech company with advanced manufacturing capabilities, says Chairman Mukesh Ambani at the 47th Annual General Meeting. Adds that the conglomerate is on track to more than double in size before the end of this decade. The Reliance board will consider a 1:1 bonus issue on the 5th of September. The move will reward shareholders, takes the stock higher in trade. No word on the potential listing of Jio and Reliance Retail. Reliance Jio will roll out AI cloud services from this Diwali. Will offer 100 GB cloud storage for free as a welcome offer. Aims to double Jio revenue and EBITDA in 3 to 4 years. The new energy business will be the new jewel in Reliance's crown, says Mukesh Ambani. Will set up a multi-gigawatt electrolyzer manufacturing facility by 2026. Expects new energy to deliver earnings like the O2C business in 5 to 7 years. Nifty and sensex hit record highs. Market closes at a new peak for the 11th straight session. Reliance, Tata Motors and ITC fuel the market rally. Broader markets underperform. Rating agency Moody's raises India's GDP forecast for 2024 and 25, citing green shoots in rural demand. Fitch affirms India's BBB- sovereign rating and stable outlook. Block deal worth 11,000 crores in Interglobe Aviation, over 2 crore shares worth 6% stake change hands. Co-promoter Rakesh Kangwal is the seller. Morgan Stanley is the major buyer. Sebi chief Madhabi Puri Book makes her first appearance since the Hindenburg allegations. Promises to ensure no delay in approving IPO applications at the Global FinTech Summit. At least 28 people are dead and over 24,000 displaced as heavy rains and floods ravage Gujarat. Weather Department predicts extremely heavy rainfall over Saurashtra and Kutch till tomorrow. Israeli forces strike refugee camps in West Bank on the second day of its assault, killing 18 people so far. UN General Secretary says Israel is fueling an already explosive situation. European Union officials warn Israel not to extend the war in Gaza to the West Bank. OpenAI is in talks to raise funds which could value the company at $100 billion. Sources tell CNBC Thrive Capital is likely to lead the round with $1 billion investment. Well, here's the top story tonight. Reliance Industries is transforming into a deep tech company with advanced manufacturing capabilities. That's the word coming in from Chairman Mukesh Ambani. Speaking at the 47th Annual General Meeting, Ambani said that the conglomerate is on track to more than double in size before the end of this decade. Here are the highlights from the annual shareholders meeting.
Reliance internalized this Vikas mantra at every stage of its growth. In recent years, this mantra is transforming Reliance into a deep tech company with advanced manufacturing capabilities.
Mukesh Ambani laid out ambitious growth targets for Reliance Group companies and announced a slew of offerings powered by artificial intelligence at the 47th Annual General Meeting. While there was no word on the potential listing of Jio and Reliance Retail, the Reliance board will also consider a 1:1 bonus issue on the 5th of September.
Our founder firmly believed that you are the backbone of Reliance and that you deserve a substantial reward from time to time as your company grows from strength to strength. On a larger mission.
Apart from plans to reward shareholders, there were a bunch of new launches. Reliance Jio will roll out AI cloud services from this Diwali. It will offer 100 GB cloud storage for free as a welcome offer. Jio aims to double Jio revenue and EBITDA in the next 3 to 4 years.
Jio is poised to be a cornerstone of India's digital future. Led by our momentum in connectivity, we are targeting to double our revenues and EBITDA over the next 3 to 4 years.
Jio launched a suite of artificial intelligence tools under the brand name Jio Brain. The broadband business, JioFiber, is targeting adding 1 million new homes every month. Akash Ambani also launched Jio Home for seamless home device connectivity.
The Jio Home app is your personal control center, letting you manage everything in your home, from your Wi-Fi to your smart devices with just a few taps. Because your security is our top priority, Jio Home app includes features like malware detection and guest Wi-Fi management, keeping your home network safe and secure.
Isha Ambani laid out the ambitious growth plans for Reliance Retail. The company is now among the top 5 in the world in number of stores. Reliance Retail is hoping to double its business in the next 3 to 4 years.
We opened 1,840 new stores this year. I am confident that we will achieve our goal of doubling our retail business in the next 3 to 4 years.
Mukesh Ambani expects the new energy business to be the new jewel in Reliance's crown. Reliance will set up a multi-gigawatt electrolyzer manufacturing facility by 2026. The production of solar PV modules will begin by the end of the year. New energy business is expected to deliver earnings like O2C business in 5 to 7 years.
I am therefore confident that in the next 5 to 7 years, our new energy growth engine can aim to deliver an earning capacity like what our existing O2C business earns and what it has achieved over the last 4 decades.
All these growth targets are fueling optimism that the conglomerate can double in size before the end of this decade. Bureau Report, CNBC TV 18.
Well, it was a stellar day for the markets despite the mid-caps being underperforming. The Nifty and the sensex hit record highs and closed at new peaks for the 11th straight session. The broader markets, however, underperformed. Mid-caps ended in the red. Reliance, ITC and Tata Motors fueled the rally. And Moody's Ratings has upgraded India's growth forecast to 7.2% in 2024 and 6.6% in 2025. The ratings agency said that the upgrade comes on the back of rural demand and strong performance in the industrial and services sector. Meanwhile, Fitch affirmed India's sovereign debt rating of BBB negative with a stable outlook. The ratings agency cited a strong medium-term growth outlook and robust external finances as key factors for this. Now, Sebi chairperson Madhabi Puri Book has said that the market regulator is ensuring that there is no delay in providing approvals to fintechs for their initial public offerings. Speaking at her first public appearance since the Hindenburg report was released at the Global FinTech Fest, Book added that Sebi does not want companies to wait for approvals when there is so much opportunity in the capital markets.
We have been focusing on saying that if the fintech industry has reached a certain level of maturity and now they want to IPO, the private equity investors want to exit, the markets are good, this is the time when we should not be wasting time in giving approvals. So as you're seeing, compared to when we started tracking in March of 2022, and we had a very large number of IPO papers pending more than 3 months, today we have just 8. And most of those are really in the realm of where there is either a judicial intervention or there is a regulatory approval pending from another fellow regulator, and which is why they are still pending at our end.
And shares of PB Fintech rose in early trade following a block deal on the bonuses. Over 2% equity changed hands at 1,660 rupees per share. This is a 4.5% discount to Wednesday's closing price. While the buyer and sellers in the transaction are not known officially, sources have told CNBC TV 18 that the 10-cent Cloud Europe BV was likely to have sold around 97 lakh shares in the company. The deal will likely be subject to a 60-day lock-in period for the seller. Well, around 6% stake in Interglobe Aviation was offloaded via a block deal. More than 2 crore shares worth 11,000 crore rupees changed hands at the bonuses. Indigo promoter Rakesh Gangwal is the seller and Morgan Stanley is a major buyer. With today's sale, Gangwal sold 23% stake worth 27,000 crore rupees in the last 2 years. Sudarshan Kumar joining us now with more on Gangwal's stake sale and his plans to sell more shares in the future. Sudarshan.
That's correct. So today, Rakesh Gangwal, who is one of the co-founders, likely to have sold 5.8% stake worth rupees 10,300 crore. Remember, yesterday when the term sheet was out, firstly, the block size was rupees 6,750 crore. Later on today morning, he has decided to increase the block size to rupees 10,300 crore. And the block deal likely to happen rupees 4,715 per share, which is 2.7% higher against the indicative price, which was 4,593 per share. And there will be a 150-day lock-in period post this tranche of stake sale, which is likely to end in January 2025. Since September 2022, when that was the first time Rakesh Gangwal had sold stake in Indigo, he has sold 23% stake, and now post today's stake sale, he still holds almost 13.6% stake worth rupees 25,000 crore. Now talking about the stock performance, since September 2022, the stock is up almost 150%, and since the last tranche of stake sale, that was March 2024, the stock is up 50%.
Right, Sudarshan, thanks a lot for that. Now, the Directorate General of Civil Aviation has placed cash-strapped airline SpiceJet under enhanced surveillance with immediate effect. The DGCA's move would entail increasing the number of spot checks and night surveillance with a view to ensure safety of operations. Meanwhile, Maro CEO and Managing Director Saugata Gupta has said that the company is well on track for double-digit revenue growth. Speaking to Parikshit Luthra, he also said that he aims to make Maro a very successful digital-first company in the next few years.
We are expecting gradual improvement in volume growth as we step into the next few quarters. Also, the anniversarization of all our price drops are taking place this quarter. So hopefully in terms of the revenue growth will be ahead of volume growth, and we aspire to at least start hitting double-digit revenue growth as we go into the second half.
Well, here's the big trigger for tomorrow. The union government will be releasing the first quarter GDP data. According to a CNBC TV 18 poll, GDP is expected to grow by 6.8% compared to 8.2% in the same period last year. What's important is that this will act as a key trigger, an important macro. For more on that, let's go across to Lata Venkatesh. She's here with a preview. Lata.
Yeah, that's right. Our poll indicated that the GDP may have grown in the April-May-June quarter by 6.8%. And this is over a high base of 8.2% year ago, April-May-June. And the previous quarter, that is Jan-Feb-March, the GDP was 7.8. So either ways, it is low. In fact, if it actually comes at 6.8, it will be the slowest GDP growth in 5 quarters. The last time we grew below 7% was in Jan-Feb-March of 2023, that is FY22. Now, the GVA estimate, gross value add, the poll indicated will come at 6.4, which is rather low. But there is a very small percentage of people who believe that the GVA could be higher. It so much depends on how much subsidies the states have given. If some of the states have given more subsidies, the GVA could be even higher than the GDP. The agriculture part is expected to have grown by 2.9%. Industry is still expected to be strong, growing by about 8%. And services are expected to be softer at between 6 and 6.5%. The services were soft because, if you remember, April, May, June were both election months and, more importantly, very hot months. It was an El Nino summer, and therefore a lot of services could not be rendered in that kind of a heat. Full year GDP, most economists believe, will be below 7%. But of course, they will modify their numbers after they see the first quarter. The Reserve Bank, you must remember, expects the GDP to have grown by 7.1%. And for the full year, they are highest on the street at 7.2. But we will know at 5:30 on August 30th what the actual numbers are.
Right, Lata, thanks so much for that. We'll, of course, come back to you for crunching those important numbers for us. Moving ahead, the government has allowed companies to list directly on international exchanges within GIFT cities, IFSC, with a minimum public float of just 10%. This is significantly lower than the 25% requirement for listing on domestic exchanges. Sapna Das joins us now with the details. Sapna, take us through the government's plans.
Well, no doubt this is an important tweak done by the government to help all those unlisted companies raise foreign capital from the IFSC. So the minimum IPO size has been, reduced to 10% odd. Otherwise, under normal circumstances for listed companies on the BSE and the NSE, it's up to 25% is the minimum public shareholding norm. But that has been tweaked and kept at 10%. For all those companies interested in accessing foreign capital from the IFSC. The rationale for this is also very clear. This will help not dilute promoter ownership. This will also help those companies have access to higher voting rights, which is what the feedback is in terms of what the investors have been telling the government. And hence a 10% IPO size is what has been mandated. So they need not go right up to 25% simply for the rationale that I have explained. But it will depend company to company in case they want to raise or rather they want to dilute their stake further. That would be up to them. But a minimum 10% and maintaining at 10% in the years to come is good enough as far as the Government of India rules are concerned. That's one. Second, this is going to be a big boost for the sunrise sectors, especially e-commerce, tech companies who are in any case attracting foreign capital in some shape or the other. And if they're interested, they can do it now directly by listing at the IFSC. Last but not the least, we are given to understand that under MCA there would be around 5 to 6 lakh odd companies, out of which barely 5,000 are listed. So this is a big step as far as the unlisted Indian companies are concerned for them to help raise funds in any of the hard currencies that they would like.
Thanks so much for that, Sapna. Now, reward-based credit card payments app Credit believes that affluent customers in India will keep increasing in the next 20 years. Speaking to my colleague Ritu Singh on the sidelines of the Global FinTech Festival 2024, founder Kunal Shah explained the key reasons behind their specific focus on affluent customers.
When we started the journey, there used to be less than 18-20 million credit cards in the country. Right now we are going to touch close to probably 100 million number very, very soon. We all have to believe that as we go towards a Viksit Bharat journey, there will be more affluent customers than non-affluent customers, right? So if you take a view from a time perspective, 20 years out, like this is a cohort that will keep growing. Why should we focus on this? I think focus allows businesses to do right things. A lot of times when we try to focus on many, many customer segments, especially as an internet company, you become nothing for everyone eventually because you're trying to be everything for everyone. Fortunately, we have a set of investors who actually believe in everything that we are doing and we have enough cash reserves. All the businesses that have turned profitable internet businesses were deeply loss-making not many years ago. The operating leverage in internet companies is actually quite powerful, but I think when we see them in the investment phase, they look like just loss-making companies. The thing is that in a few years, yes, we have to kind of turn profitable, but we believe that the investment right now is making a lot of sense. We are getting the ROI much more faster than we could ever imagine.
Now, Telecom Minister Jyotiraditya Scindia has said that the union government will not interfere in Vodafone Idea's affairs. Speaking to Money Control, Scindia added that the government would like to have a competitive telecom sector. Remember, the centre owns about 23.8% stake in Vodafone Idea. Speaking of BSNL, Scindia said that it is improving its operational performance. Take a look.
Vodafone Idea has got its own professional management. And therefore, what happens in the financial and operational workings of a company is their business and not our business as a ministry. At this point of time, as I mentioned, it is the management of the company that has to decide what practice to follow. We would like a competitive telecom sector, and as the Ministry of Telecom would like, at the end of the day, the best quality of service and choice, as you mentioned, to customers. As far as BSNL is concerned, we are EBITDA positive. We would like to see with the rollout of 4G, number one, good execution. Number two, QoS increasing, quality of service and customer sat ratings increasing for our customers. And if we're able to do both of those, profits will accrue from that line. Please remember that in life, your notion in your thinking should never be bottom line alone. It should be satisfaction of customers. If you have satisfied customers, the bottom line will come. That's theory number one.
And coming up on India Business Hour, the Uttar Pradesh government announced a new policy with financial incentives for digital influencers who promote the state government schemes. More on that in just a bit. And you can also catch all CNBC TV 18's news and updates on Facebook, X, Threads, Instagram, and JioCinema.